Join us as we disrupt the global real estate industry, revolutionizing the future of property investment and ownership.
The world has changed. Future without boundaries is just around the corner. The way we live today can become obsolete tomorrow. A whole new dimension driven by the evolution of AI and virtual reality. Are you ready for the inevitable?
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, with the people. Floki, together, there is no stopping us.
Good afternoon, everyone. BC Richfield coming to you live from London. Just got a couple of minutes past midday, which makes it the same time UTC. A big shout out to everybody who is live today. See a load of people in the chats. And Yargo, after dropping us a message the other day saying he's coming back, first one in the chat this morning. Brilliant to see you, mate. Erica, Trader Mum Joe. Who else have we got on here as well? Our wonderful Geo, Nip Par. Good morning, good morning, good morning. Whack as well, of course. All of the Trade Club are live. Brilliant to see you all. Obviously, everybody else that's listening in as well and watching this on recording. So today I really want to smash out just an aggressive, quick altcoin session. I want to know what charts you're looking at. I want to know what you want to see charted, and then to just kind of, I'll briefly brush upon some concepts and bits and pieces, but realistically, what I want to do today is just focus on how we can really just aggressively trade the trend, and then how we find those opportunities with conviction when we do. Okay, so does anybody... Hey, Whack, a big shout out for Zach. I love the fact that it's Zach and Whack. That's one of the best things I've ever heard. One day when I'm going to start throwing out prizes on this show, which are probably going to be those weird Pepe masks, you guys are up. That is awesome. Whack, I'm sure your son's a little legend. What a brilliant time to get started in this space. Very much welcome to everyone. Bram as well, welcome from Holland. Just one of my favorite countries in the world. Have so many wonderful Dutch friends, and actually so many incredibly gifted Dutch traders. Very fortunate to work alongside one, and was fortunate to work alongside a couple at the Nest over the years. Yeah, of course we can, mate. So let's RNDR. And to save my usual waffle, let's just slide straight on, shall we? Simon, hello, mate. Good to have you on the stream. So RNDR, I think this was our lovely Claudia, wasn't it? I think who picked this out. Actually, we got in our live trade club. We just had this just beast of a day. So at TBM, what we do is we've started to do live trading sessions with the members, right? So we go on there, we scalp some charts in the daytime. We're about 3.5 hours up at the moment, 3.4 after fees. And Claudia picked out this brilliant win I think we had back here. And it just basically took what was a really, really gritty day in the trenches of just grinding through these different charts. We weren't really getting big moves. Everything had consolidated. We had a big move over Asia, which means it was a really choppy session. Claudia stepped up to the plate, picked out this absolute beast with strength, and we ripped some longs, which I think was actually in this move here, which we can pop back and take a look at as well. Yeah, sure. PYTH for our friend Nip Par as well. PYTH. Cool. All right, guys. So first thing I want to do, let me just highlight this stuff here. We will add this back in later if we want to review this. So this was from our live show on the 1st, which was the 1st of the 2nd. So, Pyth 40% ago. Yeah, very true, actually. I know our fundamental guys were really going on about that. Yeah, definitely a good buy. So what we're looking at here, let's get a real zoom out, right? I think when we've got the data, we want to be looking at the higher time frame here. Get ourselves a nice clean chart. Right, so first thing I see on here are these beautiful highs up here, right? So you see these relative equal highs. I just have them labeled as equal highs, guys. They don't always have to be dead equal, all right? You can just kind of use a little bit of creative license on there as well. VE chain, yeah, sure, we'll take a look at VET, I think that isn't it? Is the ticker. So ultimately, as we look at this on a weekly scale, right, we're always asking ourselves, are we bullish or are we bearish, right? One of the things that actually I spoke to an old coach of mine who I worked with, an incredibly talented trader recently, who's doing amazing things, and just spoke to them. Just we were sitting down having a chat and talking about the idea of just not losing focus on the bias, right? Which a lot of people do, especially when you're intraday trading, right? We jump into these intraday charts and we're kind of like all excited to kind of look and get the trades and bits and pieces, and we can see these setups, but totally lose sight of the bias. The reason the bias is so important is because, look, if you're bullish through here, just for example, yeah, then you're going to catch these kind of moves. Yeah, this kind of move here. Then you have the move from like here, for example, up to here, so on and so forth, right? You're catching these big moves. If you're not, right, and if you're going against the grain and against the trade, then these smaller consolidations, right, the pullbacks are just a lot smaller, right? You can see them when you're there. The way that we kind of look at those are as opportunities for us to get in whilst we're ultimately always heading towards a pre-planned destination, and that is liquidity. Okay, so let me just mark out very quickly the other key liquidity here, right? So we had this here on the run up as well, had these, which again are relatively equal. So what we're doing is we're leaving these highs, right? And a colleague of mine and a good friend of mine, Razoon, over at the Nest as well, has created this amazing liquidity mapping software that's available free for members. And what you'll find is when you overlay that with these kind of levels, you get these kind of this accumulation of lines on the chart, right? That looks something like this. And what you're doing is you're looking for these areas where it's ultimately really heavily built up, okay? And they're always, when you look at them, around these swing highs and swing lows. When you're training algorithms or building trading bots or training traders, then that's, you know, all the books tell you about your stop losses above the highs and lows, and they're ultimately pre-made liquidity pools. Now, when we see these equally like these, and in an ideal world, you would like to see that one not have run that, so that'd be slightly higher, but semantics, then, you know, something's clearly stopped the market there. That was the launch price here, and then we obviously saw a big sell-off. So what we're doing is we're basically waiting for price to get back into trend, yeah, and then we're chasing price higher. And a way that anybody can kind of look at these charts and do that is just by looking at market structure, right? Before you're going into any of these things, just sometimes the basics are the things that we really forget, yeah? So ultimately, right, we can see from back here, and actually really for me, when we kind of took this out, now you'll see me mention these a lot, and people think, you know, oh, okay, it's just hindsight and stuff. And you know what? Hindsight is a beautiful thing, right? But it's never going to help you when you're actually trading. Look for these abnormal wicks, right? So when you get these abnormal wicks, and you know, ICT traders, people like that will know them as not on this time frame, but data or news highs or lows, right? So you have these big, powerful wicks. Well, there's obviously, just conceive it like this, right? Whether you're believing in the state of algorithmic trading or whatever you believe, just whatever happened here was an incredible amount of selling pressure, right? So when we get back there, you know, we have to have the assumption there's going to be a similar kind of reaction, same as this one here, right? Now, I'm going to clean this up for a second, and we're going to come back and focus on this just in a moment. This is going to be a little bit of a tutorial, and then we're going to spend 30 minutes ripping through other charts, all right? So I just want to give you this one as an example, because we've laid this one out here. Now, and in my opinion, there's no better exponent of this than Trader SC, who I learned so much from over the years, and Trader Dank as well, who's just exceptional, right? But actually, the Trading Tank as well, a really good friend of mine who works over the Nest, uses SR levels completely different to me, but is just an absolute dom. Now, when we get to these levels, right, let's just move these across a little bit. And I'm going to make them a little bit thicker for you guys as well, just so they really stand out. Also, as well, guys, please do let me know if any of this stuff, you know, isn't clear or doesn't really stand out for you, right? And we can always make it clearer or zoom in a little bit more. The key for these sessions is that we really kind of help build out your core understanding and hopefully in a way kind of give you a little bit of an insight into professional trading. Now, this high, right, this key high here. Now, when we're on Loretto Jr., very welcome. Love that attitude. You're very welcome here, mate. So look, this high here. So let's just work on these. Look at what happens here, right? Price comes up. You see how it just kind of peaks its head above. I like the fact that we've closed above it, but what I like more is this close, right? And people will say, yeah, but by the time you've got this close, yeah, you've lost, you know, so much of the trade. Absolute nonsense, right? Because what you'll often find is you get these retraces, right? There's a few things that this does. Now, I don't like this particularly as an order block because the body is really small, but this would set an order block. You'll normally see them on my charts as black lines just with OB, but because we've got black lines on the chart, we're going to go back to our equivalent, which is blue. I allow for a bullish order block, which is a bearish candle. I allow the top of the body, right, for bearish order blocks, which are bullish candles, yeah, then I'm looking for the bottom of the body, okay? So this expansion here did two things. Look how it overcame this key level. Why is it a key level? Look at the wicks here. Look at the rejection, the sell-off, right? It's an abnormal wick. It's absorption, meaning that our expectation is for price to continue lower, right? Now, look what happened when we got to this one. Look at the volume in that body, right? The only issue with this one is that it took us straight into another key level, and that one as well, yeah? Now, with this one, we know we've got a gap from here to here. Ultimately, this is providing us a trading range, yeah? Meaning that if price comes in here and closes back underneath and shows weakness, we expect trading to the downside, okay? Now, if price comes above this and holds like it did here, then what we're looking for is we're either looking for a retest of this order block, or for any pullbacks, we're looking to get long, all right? So what I'm going to do, just to show you this, because I know I focus a lot on lower time frames, but I want to show you how you can apply these concepts on higher time frames, is I'm going to put a green arrow on this candle. Why this candle? Because it's after this one has closed, right? So we've had that, what I call a strong close above a key level, right? My expectation now is for price to reach for this level, because that's where the liquidity is resting. Old highs, old lows, or price is looking to engage with or react at a fair value gap, right? Now I go on, cover the fair value gaps a lot. So with this one, I really wanted to kind of look at our levels. So as I drop onto a lower time frame, in this case, we're going to move down to the daily. Yeah. We can see here that from this green arrow, right, if we're looking to trade this, even on a daily scale, right, we've got our weekly level. The green arrow symbolizes where we're looking to get long from. Now, do we want to get long from up here? No, because where does our stop need to go? Our stop needs to go at worst underneath this order block, and I would favor this one, because these two candles here, down closed candles before the move up, right, engulf this smaller one, right? So I'm more interested in these two, yeah? So what I would then do is apply the same order block theory we just discussed. If you have consecutive candles, you make an allowance for both candles, right? And then all of a sudden, we're engaging with a high time frame key level. We're engaging with an order block, bullish order block, yeah? Or it pretends some people said supply and demand, but I use the term order block. Right. And then we've also set this bullish order block here. So when we're up here, right, the risk is that if we take the long and we know our level is there, right, then the nearest our stop loss can go is under the body of this or under the swing low. Yeah. So what we're really kind of saying to ourselves here is our risk to reward is terrible. It's 0.48. There's no point taking that trade because you need to win twice the amount you lose just to get to break even. Right. So what we're going to do is we're going to look at this slightly differently, and we're going to say, okay, well, we've got this order block here, right? What if price comes back down to this order block? Yeah. And, or if you're somebody that prefers fair value gaps, you know, like me, then you're in here searching for your FVGs, right? You've got a very, very skinny one here. Regardless, it is still a fair value gap. You do want to see slightly larger ones. I think you want to kind of focus on the ones that really kind of stand out. However, that is obviously significant as you get to the lower time frames. Or, you know, you might be someone, for example, that's looking for a breaker block. Now, unfortunately here, we don't really have a breaker block. We didn't have that kind of swing and sweep on liquidity below here, but we can look at those in later times. So all of a sudden, if we can then find a way to bring our entry down to this kind of area, and yeah, we have to be patient because we have to wait a few days later for it to engage. What we have here, right, is price coming down, engaging with our weekly order block, engaging with our daily order block here, coming into an area that we can look to long. And all we're saying is when price comes into this area here where we're just going to place another arrow, this arrow we're placing on the actual wick, because if we go to the lower time frame, you will notice actually that we can see as soon as price gets into here. And all we're doing is we're saying to ourselves, well, from here, we just want to see a recovery of market structure. Yeah. And we can see we had a really big bullish reaction here, right? So actually, as price is coming up, I mean, look how aggressively that was bought up. Yeah. However, still gives us an opportunity here because we can apply the same theory, move this just aside for a second. Now we can see how this has been brought up. However, price has got this beautiful long wick on there. So even if you're somebody that's looking at market structure, yeah, and you'll see this on some of my previous videos, what's known as a breaker line. We're just taking a key high, and in this case, equal highs here as well. Then what we want to see is price displace above it. So what I mean by that, hey, McRaw, my man, how are you doing? So what I'm saying about that is, look, see this wick comes above, rejection, yeah, absorption, rejection. I like this candle here, right? The reason I like this candle is because we've got that full body close above it, and it shows me that price is willing to move. So if I'm looking to long here, then I've applied all of that theory to a lower time frame. Once we close above, I set my limit order on this line. We see it hits on the next candle. It might not hit on the next candle, right? It might hit X amount of candles later. However, what I know I can do is I'm saying, well, if this is the key order block here, yeah, these collection of down candles that embody that, and I put my stop loss there, and I'm going to chase this up to this high. Now, price could well go above this high, right? But I know that that's a key liquidity level on our high time frame, right? So I don't need to be greedy. Then what I'm looking for is we pop back out to our daily, right, is how price is reacting here. And what we have to ask ourselves here is, and nobody does this better than SZ, right? But is this a deviation? Yeah, although Dank is pretty good and he has got some pretty incredible stories about the range. And is Johnny heading back into the range? Yeah. If he's back in the range and can't get out, then we would be looking to trade this lower. However, if we can form a base off of this level, yeah, and do the opposite, then we'd be looking for price to go higher. Okay. So what of the two did we get here? Obviously, it's looking a little bit messy. Let me just clear that up. Right, we can see here, doing that way it should be easier. Price ultimately came above here with a deviation. What we would have done is, or certainly when I was looking at this, right, I'd have been looking at this high across here and saying to myself, right, are we going to get above that with any conviction? And if we are, then my conviction is that we're reaching for here. However, as soon as price comes back down in the range here, and this is a really key thing for me, right, because I'm not looking at this move here. That's super bullish, in my opinion. Price tried to get below this level, but we have to be aware of the close. Look, price reached all the way back into this order block, got bought up so aggressively it came to here. Where this is showing weakness for me is here, right? This candle. Because look at the close below, right? That to me is saying that price has come back down, closed below, and ultimately we're reaching back down for this liquidity pool. Now, once again, let's just look at what we had here, facing our same principles out. We set this high, right? Price came up. Look at the absorption, right? Look at the difference in the closes here. I would have been semi-interested in this, in truth. But the one thing that kind of worried me about this is we didn't take this high before we kind of retreated. If we come up and swept this high, come back down, and then got back above, yeah, I would have been a lot more confident because it could have just been sell, you know, could have been people closing off positions here and then ultimately using the liquidity to purge lower. However, we can see if we allow that line here, look at the close above here, right? The close above here and the holding of this level. So then all I'm doing is just literally looking left and I'm saying, okay, well, where are the next key liquidity pools that I can aim for? And I love those equal highs there, by the way. Yeah, so they're really, really nice. They're a really, really big draw on liquidity. But again, you see how we've reacted here. We've come up to it at first. Now, while price is holding in here, unless it gives us any reason in terms of breaking down in market structure, then we don't really have any reason to get bearish, right? I mean, look, we've come into here and look, we broke down here because we've gone lower lows, lower high, lower low, right? High, low, higher high, higher low, higher high, higher low. Now set a higher high. So we've had a little reaction here. So ultimately we're looking for a little pushback and for price to push up. Yeah? Does that make sense? And as long as we frame it on the higher time frame, yeah, then we can dive into the lower time frames and then look for setups within there. Yeah. So like we said, just to cover that again, so I'm not moving too quickly. And if I am, please do let me know. Right. But what I'm going to do, I'm just going to Grandmaster Pikachu. There he is. So, or she. So Sui is almost at $2 and KSM is about to face rip. Well, let us see, shall we? and Sui as well. I know you brought that up a few times before, mate, so really, really good call on those. So just quickly to finish this off before we rip through some charts for about another 20 minutes or so, we've stepped back above this level here. Yeah, see the strong close. Now, unless we start breaking down, closing below, yeah, and I would want to see the bodies come down, you know, and give us conviction this is going lower, then all we're doing in here is looking for this order block to be set, right? So let's just go from this candle here. We're going to do that green to show that this is where our bullish bias exists, right? And then on a daily scale, right, all you're doing is stepping into the charts, and actually, in truth, you know, an hourly execution is probably a bit much, even for you guys as well. It'd probably be more around a 15-minute. Is we're looking in here for shifts in market structure, right? And you can do that if you're somebody that applies to kill zones like I do. That's fine. Obviously, it gets a little bit more tricky the higher the time frame that you're executing on. But what you can do is you can just wait. Yeah. So you're coming into here, higher highs, higher lows. When you get a point of consolidation, what you really want to see is a sweep, which is inducement. Yeah. And then you can take the high that swept that low as your entry, which is our breaker line. Right. Then what you're doing is you're always looking left for targets, right? Because we've got some lovely pre-made targets. So we've taken off here, right? We want to be aware of these highs that are all sat above here. ICT traders will know them as low resistance liquidity. Yeah, LR, LR. And ultimately, we're reaching for this, right? And then we're just marking off these levels as we go. Ooh. And then looking at how price reacts when it gets there. So let's just focus on this one for a minute, right? And we'll just draw in the other ones as well. What we want to see, and I'll focus on this one above the other one because basically these are relatively equal. What we want to see with these lines, remember like I'm saying to you about these wicks, right? We want to see them basically turn into what would be typically conceived as support and resistance, right? So we've broken away from here, yeah? We've set this order block, price has come above. We've actually, with this one, we can even be a little bit more aggressive because we've got a breaker candle in here. This breaker, right? Which I do in orange on my chart. This one here, which is the body of these two up candles before the purge on liquidity, when price breaks above, similar to the breaker line theory, that's where it comes from. It just means that we can be a little bit more aggressive with our stop placement here because we can put this under the breaker candles. We can put it under the bodies or under the wicks, right? Ultimately, what you want to know is where your high time frame target is. And while we're aiming for this, yeah, you're not just going to hold it blind all the way. You wouldn't have made it. We want to see how price reacts here, right? So price comes and reacts here. Strong close above, remember? Yeah, see it hold, price pushes up again. Look at the noticeable resistance it gets at this level, right? But it continues to hold this area. If you want to look at them as order blocks, yeah, that can be helpful as well because you can see here, as price closes above this, yeah, that sets our order block. We're now looking for this to hold. If we start getting closes below, we can start to take some positions off, right? Ultimately, when we get to here, we've got a good opportunity at 2R to move our stop loss to entry, yeah, if we want to, and protect our trade. And then all we're doing is we're looking at how price respects these levels moving up, yeah? So we see how that's respected as support and resistance. And even all the way over to here, support, 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 strong close below, retest, sell off, okay? So as we see that there, we see the same thing happen here, right? Close above, right? Then we confirm the order block here. So we expect this to hold. It does hold. If it closed below, like I said, it would have been a sign of weakness. Then we come above this level here. Again, look at the movement, strong close above. And we see noticeably at this level here, how price is getting these rejections from our higher time frame, yeah? And look how we never get above that. Look, as time plays out, what happens? Price comes back down below here. And at that point, I would definitely be either moving my stops up or making sure that I've booked a good amount of profit on the trade, always leaving runners to go higher, yeah? But ultimately, you can then feather out of that position as it goes down. Now, hopefully that makes sense to everyone. We're now going to apply that to a few other charts, right? So we RNDR, or actually, let's just quickly look at RNDR in terms of where we think we're going today. Yeah, so for me, I think, look, we're bullish at the moment, right? We're bullish on a daily basis. We can see price getting rejection at this level here. If you're looking at this for daily confirmation, then we want to see a close above this level. Yeah, so bullish close above that. And then I think we go time to equal highs. That's certainly how I'm going to be looking at it. Looking at this from a 4-hour perspective. Yeah, again, I think I want to see us come above this. What would have me bearish here is if we closed below this. We can see that this fair value gap on the 4-hour is supporting price beautifully here. All right, so quite simple for me today. My bias is this. If we step in to the New York trading session, which starts in about an hour's time, and through that session, or New York PM session, I'm not a big trader of that. Obviously, want to draw that a bit better. If we get that close below, bearish close below, remember, it has to be a 4-hour close to correspond with this. Not as concerned about this order block. I'm then looking and saying, okay, well, where's price running for? The chances are it's running for this low, right? We would obviously be aware of this fair value gap here as well. But ultimately what it does is it gives us this whole expanse here to trade lower. Yeah, and on the lower time frame, we look for that break of market structure lower. All right, just go and look at any chart on any time frame, right? And if you're really feeling lost, then just look at market structure, right? And I'm just going to do it in this little example here. Look for your clean highs, your clean lows, right? What is price doing here? Now, something like this actually is a good example, right? Because within this, yeah, we've got a low set here, a lower high and a lower low. So a lot of people are saying, okay, well, we're bearish here. And there's no problem with that. Sometimes you've got a key low like that. Look at how price reacts when you're there, yeah? So again, we can see here with the low, yeah? So we got the low, lower high, lower low. A lot of people saying, right, okay, bearish there. Well, just make sure that you're taking into account where price is delivering from, which is your fair value gap here, yeah? Now that versus this move here, for example, where we deviate a high time frame level, right, which we already highlighted earlier. We've now stepped back into this range, right, sign of weakness. So now we're saying, okay, well, look, but we're higher, lower, lower low off of a lower high, but we've got a higher high here, breaking this higher. Now we're delivering here from a bullish fair value gap. When do we look to get bearish? Yeah, when we close below this, right? And then all we're doing is we're just chasing down liquidity at the lows, yeah? Now, ultimately, we don't get there at that point. However, what we're looking to do is just scalp that lower on a lower time frame. And quite often you'll find that price will. Ultimately, what happened here is price just found support within that fair value gap all the way along here, yeah? Didn't actually get the close below. So just to kind of just extend that theory, when we're looking at our market structure again, not to get preachy, right? But look, we shift our market structure here, right? And we just continue setting lower highs, lower lows, lower higher, lower low, lower higher, lower low, higher higher, higher low. There's our break in market structure confirmed. We're just looking for bullish trades, bullish trades, bullish trades, bullish trades, bullish trades, bullish, 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 lower high, break this low, then we're looking bearish down to our next key point of support, right? Sometimes I think people do just kind of overcomplicate this a little bit. And that's not to sound like a magnanimous prick, right? Honestly, I just think that sometimes it's, you know, we kind of get ahead of ourselves, or we want to try and impose our will on the market. So Grandmaster Pikachu, Bram, you're very welcome, mate. And Tammy, good morning. Great to see you on here. From an ICT standpoint, is consequent encroachment not a thing in crypto like it is in index and Forex? Yeah, absolutely. So if you're looking at this, which we will do on here, it's just not as clean, right? So for those of you that don't know, and again, I'm not here to teach you ICT concepts. He's played a very big role in my life in terms of instruction and that, and I couldn't, you know, advocate more going and checking out his stuff. Go directly to the source, but also make sure you're checking out people like Trader SZ, Crypto Burb. You know, Burb is one of the most talented traders in the world, right? You know, he's a big character and stuff like that, but he is just at the absolute forefront of understanding the market. He's a CMT level 3 chartered market technician. We've got another CMT level 2 in your NLP coach who's part of our team as well. These guys understand the market intimately. It's more about finding what works for you, right? Like for me, for example, Burb's got this wonderful calm way about him, can sit in these swing positions for days, weeks, months sometimes, and happy if he's 30% right. But his 30% accuracy rating or 30% win rate is worth a huge profitability. You know, he's almost, I think, 500,600,000 this year in trading, right? But for me, I don't like holding trades that long. It makes me a bit uncomfortable. So I like intraday trading. So that's how I kind of built my styles. Stevie boy, great to see you as well. But anyway, before I digress, right, let me just put it like this. So consequent encroachment is, we're talking about this, right? We're talking about this fair value gap, or you're talking about an order block, or you're talking about a rejection block. I'll let you kind of work into what they are. But this fair value gap here, the idea is really that you want to see price kind of hold the midline. Now, again, crypto can be a little bit less clean, right? So really what I'm looking for in here is, if price closes below, that's the only time I'm getting bearish here, right? If not, I'm staying bullish. And let's just let's look at that theory, because we did reject from here. But if we're looking in the same vein about how price moves, if we take an old high or interact with a key level like this, we sweep liquidity, and look how we failed to close above, then our expectation here when we set this order block is that price can come back to this before it then engages bullish again. I'm not just switching bearish because we've kind of hit this, yeah? Because ultimately what I want to do is I want to use kill zones like this. So I'm bullish here, yeah? So being bullish in here, just even on a 5 minute, and I do trade this on a slightly lower time frame. Yes, this is very messy, right? But ultimately what we're looking for is quite simple, yeah? We're looking for a sweep. We get a main sweep there, which is our key point of inducement, right? So that's perfect. But what we don't get is the high that sweeps the low is all the way up here. So that's no good to us. What we're then looking for is our secondary sweep, which we get here, right? So then we're saying, well, where's the high that sweeps this low? Well, it's this high here, yeah? When do we actually close above that high? Here, yeah? So remember what I said to you before, that becomes our breaker line. So our entry would go on that, right? We would want to target this. We'd also want to be aware of this. And then what we do is we're saying, okay, let me just change that to a breaker line so that's nice and clear. Right? We're then looking at this and we're saying, okay, well, where does our stop loss go? Well, we've got this order block here that was set before the move came above. So realistically, the nearest we can place it is under that. Then we're looking to hold this for 1.97. Ultimately, we don't get that this time. The bias was correct, yeah? But price rejects and falls a little bit short. You see it less in traditional markets. You would literally be also looking at that level there. However, again, market structure allows us to get out. We shift market structure here, which is there. At this point, we would have got to a level where if we want to take our standard deviations, yeah, and we're looking for the manipulation leg that led to the route higher, which is this one. Yeah, then we get our 2 standard deviations here, meaning we can move our stop loss to entry. Ultimately, we make some money on the trade, not what we were after, but we don't post a losing trade. And we also have control of that purely because of our high time frame bias. All right. So where are we today? Just very quickly, and then we're going to spend kind of 10, 15 minutes ripping through Pyth, VET, KSM, and Sui. All right. So now we've run this, I'm leaving this level on there because I want to see how price reacts. However, on a daily scale, I can't not be bullish here, right? Higher highs, higher lows, price is moving up. But is it really telling me anything in terms of actions? Not really. If we go back to our 4 hour, which we were just looking at, we're holding this at the moment, yeah? We're actually now back out above it. One of 2 things is going to happen here. So we go into the New York session. I'll then look on the lower time frames to see if we get a pullback into here, yeah? And then on a lower time frame, obviously, we're looking for that sweep, price to get back above, re-engage, and then we look to target these. That wouldn't be on this. This would be on like a 5 minute chart or something like that, right? Or we get the secondary option that we discussed before, which is price shows us weakness here, closes below here, in which case that's target 1 and that's target 2. All right. That's as simple as that. That's what my plan is, or RNDR. Does that make sense to everyone? And maybe it doesn't make sense to you completely, but you have the ability to watch this back. Hopefully it's relatively straightforward. I'm trying to kind of break it down in a way that people can take this away and test it. I'm not asking you to believe me. I'm certainly not asking you to follow me or to copy me in any way, but I'm just trying to give you some kind of ideas in the market that you guys can go and take away, and especially put onto kind of like a medium time frame. Not sure it's going down too well because we've lost about half our viewers. But to be fair, I do think this stuff's really important. It's not the sexy stuff that you see, but it is very, very important. So let's take a look at Pyth, shall we? Yeah. Where's the perpetual contract on here then? It's .p, isn't it? Perfect. Let's take a look at the Binance contract. Our good old strategic partners over at Binance. So Pyth just absolutely ripping. We're going to jump out here and we are going to go to weekly. Obviously on Binance, maybe not the biggest history for this, right? But what I do like is this. Again, what are we doing? We've just taken a key level. Why is it a key level? Abnormal wick here as well. So for example, abnormal wick here. Initially got the rejection, yeah? But then when we closed above, where did we head for? This one, right? Through this one. So makes sense? Abnormal wick here, rejection, no problem. We're still bullish here. We wait for price, push up, yeah. We get above this, close here. Ultimately, we're then looking for the prior week's high here, because look, in this one, we've closed above these two key levels, 1 and 2, meaning the close above we see as strength, looking for this to push up higher, okay? That's just what we're talking about, or what I'm talking about, sorry, in terms of looking at kind of how we can kind of judge strength and weakness on these levels. So as we look at this here, again, you'll see it a little bit clearer here. Big rejection here. What happens? Once we close above it, yeah, we see price come under. That's why, you know, people will want to kind of buy up here. Yeah, they'll see the big breakout, and they'll want to jump on board, they'll FOMO in, and they just get wrecked. Now, what you see here is price tentatively probing towards this and then big expansion. You don't want to short these candles. And one of the best things that SE ever said, in my opinion, I think so underrated, is small body candles lead to big body candles. Yeah, small, big, boom, right? Small, big, boom. So that's when you want to be looking within these consolidations and just give yourself a set of triggers that you can apply. For example, you could look at something like the change in state of delivery. You want to find a good order block, yeah? So pick any one at random you want here, right? Down close candle. When we close above this, with this candle here, our expectations for price to go higher unless we close below this, which we don't, yeah? So that's what would be called a change in state of delivery. You can also look at the state of delivery, right? Or where we're delivering from. So bullish fair value gap where, well, we're in a positive trend, we're in an uptrend, a bullish trend. So what do we expect this to do? To hold. What happens if price does this and comes back and closes below, right? If that candle, for example, then we'd look to this low, an intermediate term low. And then when price gets down to here, we'd be saying something similar. We're like, okay, is that a liquidity grab and did price get back in quite quickly? If it did, then we'd look at something like that, right? However, if price failed to get in down here, yeah, then we would be expecting it to go lower, right? Always just in the search of liquidity. So we're looking at old lows, old highs, okay? And then we're looking for fair value gaps to rebalance price once we take a high, yeah? And then when we get to these highs, yeah, is you're just looking at them, right? Any of them. Like, you know, is this clear and obvious? Is there an abnormal wick there? Not really, right? You probably stay with this one, maybe. But in truth, you're looking for these key ones that stand out as a peak. Yeah, like this. Right? Rejection, 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 rejection. Strong close above. Away we go. Even this, look, strong close above here, forms a bit of a peak. Similar kind of theory. Rejection, 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 strong close above, and up we go. Yeah? So, putting that into theory here, and looking at this, right, just really, really clean, isn't it? Strong close above, prices here. Now, one of the tricky things here is looking at where price goes after price discovery. And I know people use like Fibonacci's and stuff like that, for example. You can use your standard deviations, and considering we're in an uptrend here, yeah, we'd actually be looking at this as the move down, yeah, the manipulation leg that sweeps liquidity before price has its kind of move higher. So if I was going to take this move here, and I'll show you how you can do this, right, is I just got a Fibonacci set up. For anybody that's interested, you can also slap me a DM, or you can't DM me, sorry, on Twitter. You can try contact me through the Nest, or just pop me on Twitter. Just get a fib, and all you want to do is put in a 0, a 1, a 2, sorry, a 0, a 0.5, a 1, a 2, a 2.5, and a 4, right? Reverse or non-reverse. Basically, what you want to do, if you're looking for how far this can go up, yeah, you're looking for this movement to measure, yeah, which is the movement down, yeah, that takes liquidity below these lows before price breaks structure to the upside. If you're looking for it on the opposite side, yeah, so we're looking at this, for example, we're looking at this move up before price breaks market structure here. This one, because we assume there's some kind of liquidity behind it, but we'll just measure this one for the sake of having it, right? What we're always looking for around here is price to get down to around about our 2 level, yeah? Between 2 and 2.5 is the key area that I target while I'm looking at what price is then going to do. Then I'm looking at what happens when price gets down there. See the absorption on the downside wicks here, right? Downside wick, downside wick, downside wick, downside wick. Price is just getting bought up. Break structure here, then we're in bullish mode. Now I'm looking towards the 4 standard deviation, which is up here, which is about 0.8211. Yeah, to be that level that price is going to be reaching for up there. Okay, so in terms of that on Pyth, I'm obviously bullish on that. I just want to look here and kind of say, look, it's very difficult to short when you're breaking all-time highs or all-time highs on this chart. I'm sure someone better versed than me in alts would say that there's other charts you can look at history for, and obviously try and get the chart that has the most history typically, but Binance are quite good with that, but appreciate some of the other exchanges will have better stuff. But it's the same kind of principle here. We're bullish until we're not, right? So go on something like a 4 hour, draw in your fair value gap. We can see in London this morning, price came in, had a beautiful reaction at that, probably would have had a lovely little trade opportunity off of it, which he would have done. Yeah, so look, this is it. It's not here, right, because we've set the fair value gap here. Price comes back to it here. Remember what I said to you before. We just want to see, I want to see inducement, meaning that we sweep those. Look at that. There's not even any candles closing below that. It shows you the buyers are there. If you look left as well, then throw some confluence in the mix. Where's the key order block in here? And why is it a key order block? Well, it's a key order block for 2 reasons, right? One, we've got a decent sized pair of down candles, good bodies, yeah? No ridiculous wicks going off here, there, and everywhere. Price moves away from it and retests it once, twice, respecting that to the dollar with the bodies, right? When price comes back here again, we expect a bullish reaction. If we closed below these 2 levels here, then we'd look at these getting chased down, all right? And then here, there's our breaker line, right? So again, we've got pre-made targets of these highs up here. So we're saying to ourselves, okay, do we have the risk and reward? We closed above it here. So again, we put that on there. We put our stops below the order block, which is there. And then we're just looking to have at least a 1-to-1 R here. Great. We can move our stop loss to entry here. And then we just manage this on as it's on its way up. Yeah. And again, in terms of managing the trade, look to your order blocks. Yeah. You want to see those holding the market. It does. See how it, make that a bit bigger for you guys. See how it just digs into this here and then moves up. So then we're saying, okay, when does the next set of order blocks get confirmed? When price closes above them. Yeah. So price closes above them here, confirming this. So now we want to see this hold, right? I'm not as interested in this one now, but I mean, it's shown good support, right? So you would always be aware of that as price comes back below. But ultimately, if we're expecting higher prices here, then we're looking for this to hold and for price to move up. And all we're doing is we are just making sure that the trend is our friend until the end. Yeah. Someone told me that years ago, and it's always stuck, and it's so very true. So on Pyth, you can't not be bullish at the moment. All right. We've got about 5-10 minutes. So let me just run through some other ones. Josie, hello, mate. Great to see you. And Grandmaster Pikachu, you're very welcome, mate. You know what? You got to make sacrifices in life to do certain things. And, I don't really tell people a lot about my personal background, but I used to run businesses for a living, buying and selling companies, and tried to do a few good things in life as well. And kind of like businesses that help, public sector, schools, etc. And, I was in a very comfortable position in life when I made a big decision to sell from all of that many years ago, commit to my trading, go full time, stop the income that I had from that was giving me a bit of a comfortable lifestyle. And, I just broke myself and just went night and day, just learning this, staying up till all hours, finding the best people I could, learning with the best people I could, and just going absolutely mental. And while it seems like, the key thing is you want to understand your trading system with this level of conviction, right? That you look at something and it stands out to you. And if you find that you're not doing that, then it might just be the case that you need to step back, work out what type of trader you are. Are you a swing trader? Are you a position trader? Are you an investor that needs more FA information? Are you someone that can trade intraday like I do? And then just cutting out all the noise. First thing you should do is just strip away your Twitter completely, right? Look at your posts from people that align with the systems that you trade and people that you've built trust in over the years, but get rid of the noise. I know loads of people sit there all day. Pythy's new. Oh, well done, Yago. Thanks, mate. Yeah, not, as people know, not really my strong suit. I trade the alts, not from an investment point of view. But yeah, just make sure you're focused on the trader that you are, okay? So would you count the 4-hour recent candle as a topping tail? So this one, on Pyth, I would consider this as a pin bar with a short nose. If you mean this one here, mate. This one inverses, then we've got a bearish hammer, yeah, or a bearish pin bar here. However, as the very excellent, my very dear friend Pedro, or Pedma7, you know, if you want to follow him on Twitter, brilliant algorithmic trader, did a study on engulfing candles and pin bars are a heck of a lot more accurate, right? When they're with the trend. Yeah, so just going to highlight some of the key kind of pin bars on here for you. Boom. You kind of got that one there, which is quite big as well. Pin bar there. Right, so you see, notice how we break trend, right? Now, if you're kind of looking and you're with the uptrend and you're looking for bearish pin bars to work, they're a really brilliant thing. This one's a little bit more of a doji, really, but this one gives you a pre-warning that you've got a correction coming in, right? So don't take it as a market change. You can look at that as a corrective move, and that gives you the opportunity to get involved, as do divergences, right? So this is what I use the B Pro for mainly, and it's absolutely sick at this, right? Because it's just, look how often it catches the corrective move. So reversal here, yeah, huge corrective move here. Correction allows you to position yourself bullishly. Correction allows you to position yourself bullishly. We've had another one come up here. So again, I'm now looking at this, right? And I'm saying, okay, well, what makes sense to me is this, yeah? And what if I'm wrong? Well, then this makes sense to me. Yeah, because we've got pre-made liquidity resting down here. Okay, so cool. I'll show you the divergences in that as well, so you guys can see those when I'm covering the other assets. So basically, yeah, for Pyth, that's really straightforward. As we said, we're looking for that fair value gap to hold, and for higher prices, or we're looking for 4 hour to close below, in which case we're looking for lower. Let's take a look at VET. Let's get a nice perpetual contract on VET, shall we? Go with our, yeah, let's go with our old friends Bybit. So a quick look out of the weekly. Wow, this thing just looks like it wants to go here, right? Straight away. That's your liquidity there. Right, so what's that? 0.03884. Okay. Again, we're just holding bullish, higher highs, higher lows, right? And we come across, we've got this here, you know, I try not to make myself, in fact, I spoke to this recently about a trader I really, really respect in this space, a very good ICT trader, talking about how distracting the left side of the chart can be. So when price gets to here, fine, we've had a reaction more from these highs than this fair value gap. But now with price drawing back into this, this can be a sign of strength, right? But I don't want to cover that today. Focus more on what price is doing in here, yeah, the immediacy of delivery. And what we can see here is this order block. Yeah. So look, change in state of delivery, down close candle, order block confirmed here, meaning that we should have been super bullish this week. Yeah. And so far that has paid dividends. Okay. If we're applying the same principle here on the daily, we can see that we get that here. Yeah. And now I would say this, for me, this is an intermediate term high. Yeah, so you see them marked up. It's basically a high that's within a fair value gap is the easiest way to think about it, right? And again, look at that weekly level. What happens when we do get above it? It just treats it as support, and you see the big expansion and then wallop. Why is it moving up to there aggressively? Because this is the next point of liquidity, and it's within this fair value gap, which for me makes it an even more important liquidity pool, okay? So from here now on the daily, I'm saying, okay, well, this is the next level I'm interested in. We hold here, we close here today. Look how we're starting to get this bit of a pushback here, right? So if price comes back down below this here, I'd need to see more confirmation. But ultimately, if we hold above this today, I'm going to continue my bullish bias for the rest of the week. On the 4 hour, if price does come back below here, what I'd really like to see is this hold. Yeah, so something like this. Right, obviously looking at that as well there, not straight up to there, you'd watch it as it goes up. Again, you know, using the 4 hour as our main one to close below here, especially if we take out that fair value gap as well. Any pullback there, in my opinion, is for selling down to here, which is again an intermediate term low, right? I know that was an intermediate term high. This is an intermediate term low because it's within this fair value gap here, right? So that's really, really simple for me. So again, I'll be watching this afternoon, a little pullback into here. If we get a bullish setup on the lower time frame, then I'm looking to long into that. So that's VET. Let's have a look at our old friend KSM. This is one of the first assets I used to trade, funny enough, many years ago. Always gets me a little bit, always makes me really think about it. Right, KSM, here we are, weekly chart. So what are we doing here? So price has come down here. This is a little, not really that tricky actually. Price has come down, so we're currently holding this weekly fair value gap, right? What I like about this is on a weekly scale, we've had a change in state of delivery here, right? Because we've now closed above this. Ah, ladies and gentlemen, our one and only QBS. There he is. Give him a follow, not only for the banter. Because QBS, put your handle in the chat, will you please? I can't remember if it's QBS _ graphics or just QBS graphics. But give this legend a follow for me. Just a wonderful human being. A massive pain in my ass sometimes as well, I like to say, but he has got some world-class banter on him and is a really sick little trader as well. And he's responsible for all of the really cool graphics that you see, including my logo. So, yeah, I mean, weekly scale, it looks like price wants to go here, right? Is it going to? I don't know. We're going to have to wait and see, aren't we? But that's the theory. If we're holding this, we've changed our state of delivery to bullish here. So again, like with VET, we should have been bullish this week, all right? Now, same here, even better with this one, right? Because we've got this change in state of delivery here as well. What I really like about this is, so we're bullish from here, so we're bullish from Tuesday, right? What I really like about this is we have these relative equal highs here, as you would see them clearer as you move on to a lower time frame, right? That is, in my opinion, you can write this down if you want, 47.16. I think that's where price is reaching for as we speak. Also, what I like about this is there's no fair value gaps in here, right? Meaning that it's just very unlikely price has anywhere to majorly reject from. The key thing or area it could reject from is the prior day's high, right? So Monday's high, nice clean high, slightly long wick. You know, for extra conviction, if we get that close above and stop about here for tomorrow, then I'm ripping that into those highs over there, all right? And then let's just take a quick look at the 4 hour. Here we are on the 4 hour. So again, we can see what happened. We get our close above here. So like we were saying, stepping into Tuesday, we are bullish. What are we looking for from Tuesday, right? We're just looking from where price can be reacting from. Now, I would consider this the cleanest play here, which is our breaker. Right, so breaker candle, up candle before the purge on liquidity, taking out those equal lows. Price then had a bullish reaction, closed above here, right? We haven't taken out any internal highs here. We set this one, right? So when price returns here, Tuesday, which would have been really nice actually for our PM session, what we're doing is we're just hunting around in this box for what we discussed, yeah? So if anybody remembers what it is that we want to see a sweep for our inducement, yeah? Show us that the market's ready to make its move, which we got here. However, the high that swept that low is all the way up here, yeah? So we're not going to wait for that. What we're going to then wait for is we want to see an internal sweep for any of the keen-eyed amongst you. There's two, but there's that one here as well. And there's also the one just a little bit lower. What I like about the little bit lower is the fact that it gives us this high as our breaker line, which again is just a little bit closer. And you'll see often with this breaker line here how you get the close above, you set your limit order, right, which is down on this line, tags it on the next candle, tags it again back there, right, but you're still in the trade at this point. Your stops are going underneath here, right, or they're going underneath the breaker candle, right, because what we have here is a breaker within a breaker, obviously a higher time frame breaker. Yeah, so when price closes above that here, same principle, but what we can do is we can use that to set our stop loss because we don't expect price to come back below the breaker. Otherwise, we are probably in a little bit of a mess on our theory. And then what we're doing is we're managing this up again, intermediate term high within a fair value gap, also an abnormal wick. And we can just hold this, right, and just look left, and you can start to see where price is getting these rejections, right? So hold it from here. I really do like high of day here, yeah, which is back here, also Asia's higher. And ultimately, you would have gone through a little bit of a meltdown here, probably cashing out a lot on the way down, but price did ultimately reach up for that one. So that's VET, that's KSM. SUI, I literally have 3 minutes until I need to be on a call. But for you, Matt, PCK, I will indeed find that because I do love peacocks. I think the feathers are awesome. So we'll take a very quick look at BTC as well, right? So just quickly, SUI and then BCC. Nice and big. Here we go. Actually, I mean, this thing is just ripping, isn't it? Right. Again, same principle. Just let's take a look on the chart. Abnormal wick. What happens? Boom. Go into the chart. Rejection. Rejection. Close above. Now price is moving higher. Price is now ultimately in price discovery, though, right? So what we're saying here is for me to be bearish on this at the moment on this kind of time frame, I'd need to see that closed below. Yeah, in which case then, look, we've got these nice untapped lows going lower. We have had a big expansion. If that does happen, I'll definitely be engaging in some shorts. As it stands, holding this order block, yeah, we confirmed our change in state of delivery above it, which was this candle. So it's allowed us 2 bullish days off the back of it in terms of the 4 hour. What we're looking for at the moment is obviously expansion. Wednesday today. Let's have a very quick look at the markets. Nasdaq's nice and bullish today as well. DXY is pretty flat, so that could be good for continuation. If this candle closes here, forming an order block, and we've still got 3 hours for that to happen, right? But let's just say we get that, forming a fair value gap, sorry. And then price comes back below this, closes the 4 hour below it. Again, I would look probably to short that into this low, but I wouldn't be looking to hold these for very long. I like those equal lows as well down there. Maybe we're coming to retest this, but we don't want to lose sight of our, our high time frame bias here. Also as well, if we set like a bearish order block, I'll just do it in red to show you. So price travels down here, sets this bearish order block. What I would then be looking for is for us to close above that order block. Yeah. And then once we get that, I'd again be looking for a little pullback and looking to long this again. Treacherous to short any asset that's up at its all-time high. All right, guys. So at the moment, this is what I'm watching. As long as it sets, if this gets closed, yeah, then I'll be looking to this order block or this one here, really, right? Because that's the bigger body of the candle to see how price is moving up. And let's just close on BTC, shall we? For our friend Matt. DM photography. Thanks, Mr. Nest. Love that. Right, okay, BTC. And let's just, do you know what, actually? Let's go on the Binance spot chart. Why not? Looking at these on more of a spot asset basis, right? So, boom. So again, let's get our abnormal wick in the frame, sorry. And what I like about this, we can see is we just had a little bit of a close above it. I'm not crazy. I wasn't crazy convinced with that. I'm not going to lie. We have this intermediate term high above, which we're about to hit, which is where I think price is just going to have a little bit of a reaction. Again, strong weekly close above that. Then I think we're ripping towards all-time highs. This was just a bit of a tricky one. Technically, yes, bullish above this because you just really want to move up to this, right? But the thing I didn't like is this high was in immediately close proximity, right? But we can see here that we've had this really nice kind of move up. Actually, Bitcoin's just been so bullish, even on a daily scale, right? It hasn't really done anything to keep you until here, right? And why is this really important? This close above it, meaning that yesterday really should have been stepping in again, looking for price to draw back. And ultimately, I think our target here is 52,088. All right, legends. Awesome. Picked up to 0.52. That's a brilliant buy. Look, yeah. So punchy, short. Well, not really that short, actually, almost about an hour. I hope you've really enjoyed that. Going to kind of try and focus on that a little bit more in the coming weeks and times. Guys, we are going to be doing our live trading session within the Nest this afternoon. So that's going to be kicking off about 1:30. I do apologize that I have to run off now, but I do have another meeting to go to. Lots of love and respect to you all. Hope you've had a really enjoyable stream. Please do leave me notes and feedback, and don't forget to get involved. Join the Nest. You can do so for free on a load of different offers if you do so, like with our partners Prime XBT, for example. You can get access to our trading calls that earned over 330% for our Nest members last year. So big thank you to everyone. Gio, you legend. I see you in there. Trader Mum Joe, Nit, all of you. Really, really big thank you to you all. Lorenzo Jr., really apologies I didn't manage to get onto the coin you suggested, my friend. I will do so on Monday if you're around. Take care, guys. Have a fantastic week ahead, and I look forward to seeing you around the Nest.